Is the housing market about to crash, or are we heading into the biggest boom of the decade? If you're thinking about buying a home, selling, or investing in property, the decisions you make in 2025 could change your financial life for decades. With mortgage rates shifting, inventory still tight, and global economies uncertain, the question isn't just about housing, it's about your future wealth. Welcome back to Asset Bloom, the channel where we turn complex financial trends into clear, actionable strategies. Today we're diving deep into one of the hottest debates right now, the housing market in 2025. Will we see a crash like 2008? Or will housing prices keep climbing, creating one of the most competitive markets in history? The truth is, it's complicated. There are strong arguments on both sides, and the outcome will impact not only homeowners, but also renters, investors, and anyone planning their financial future. Stick with me until the end, because we'll break down what experts are saying, the key data driving housing prices, and the steps you can take to protect and grow your wealth, no matter which way the market turns. 1. The current housing market snapshot, USA. Mortgage rates dropped slightly from their 2023 highs, averaging around 6.5% in early 2025, but affordability is still tough. Median home prices remain above $400,000. UK, average house prices hover near £290,000, with London significantly higher. Rising energy bills and inflation have strained affordability. Canada. Major cities like Toronto and Vancouver are still some of the least affordable globally. Average home prices are around CAD $700,000, though some smaller cities are cooling. Prices haven't collapsed, but affordability remains a challenge across the board. 2. Why some experts predict a housing crash. A. High interest rates legacy. Even though rates are coming down from the 2023 peak, many households locked into high mortgages. Refinancing isn't always possible, and buyers are still cautious. B. Affordability crisis. In the U.S., home prices are nearly 35% higher than pre-pandemic levels, while wages haven't kept up. Similar gaps exist in Canada and the UK. That imbalance could force a correction. C. Rising inventory in some regions. Zillow and Rightmove data show that new listings are increasing in some markets, easing the supply squeeze. If supply outpaces demand, prices could soften. D. Economic slowdown risks. If recession fears in North America or Europe materialize, job losses could push distressed sales higher, leading to localized price drops. In 2008, many households couldn't keep up with payments after adjustable mortgage rates reset, triggering mass foreclosures. While lending standards are stricter today, affordability stress could create smaller regional mini-crashes. 3. Why other experts predict a housing boom. A. Chronic undersupply. The U.S. has an estimated shortage of 3.2 million homes. Canada's CMHC reports needing 5.8 million new homes by 2030 to restore affordability. The UK faces a backlog of hundreds of thousands of units. Supply simply isn't keeping up with demand. B. Demographic demand. Millennials, the largest generation, are hitting their prime home-buying years. In Canada and the U.S., immigration is also adding significant housing demand. C. Falling mortgage rates. If central banks continue cutting rates in 2025, borrowing becomes more affordable. Each 1% drop in mortgage rates increases buying power by about 10%. This could bring buyers back into the market quickly. D. Real estate as inflation hedge. In uncertain times, property remains a safe, long-term asset. Investors worldwide see housing as protection against inflation and currency risks. Data point. According to Knight Frank, global real estate is still attracting international capital flows, especially into stable markets like Canada and the UK. 4. The middle ground. Stability, not collapse. Most credible economists don't expect a full-scale crash. Instead, they predict regional variations. Hot urban centers, Toronto, London, New York may see stabilization or slight price declines. Suburban and mid-sized cities could continue growing as affordability drives migration. Luxury and investment properties may stay resilient due to wealthy buyers and foreign capital. Think of it less like 2008 and more like a series of micro-markets moving differently. 5. Practical advice for 2025. Buyers and investors. If you're buying a home, don't try to time the bottom perfectly. Instead, ask, can I afford this comfortably for the next 5-7 years? Get pre-approved for a mortgage now. If rates fall, you can refinance later. Consider growing secondary cities where affordability is better, but infrastructure is strong. If you're investing in property, focus on rental yield, not just appreciation. Rising rents in many markets, U.S. Sunbelt, UK Midlands, Canadian secondary cities, still make property attractive. Look into REITs, real estate investment trusts, if you want exposure without the headache of being a landlord. Diversify. Don't put all your wealth into one property. If you're waiting on the sidelines, build your down payment fund in a high-yield savings account. Strengthen your credit score to lock in the best rates when the time comes. Keep learning about your target market so you're ready to act. 6. What this means for renters. If buying feels impossible in 2025, you're not alone. Rental markets are still tight, with rents rising in most major cities. Tips for renters. Negotiate renewal terms. Landlords often prefer stability over finding new tenants. Consider house sharing or moving slightly outside city centers. Use the money you save from not owning to invest in index funds or ETFs, so your wealth still grows while you rent. 7. Expert voices on 2025. Housing. U.S. Goldman Sachs predicts U.S. home prices will rise about 3.4% in 2025, not crash. UK. Savills forecasts a 7% growth in housing prices over the next 5 years as rates decline. Canada. RBC economists expect stability with modest growth as immigration fuels demand, but high prices keep a lid on runaway increases. The consensus? No massive crash, no runaway boom, just a complicated, uneven market. So, will 2025 bring a housing market crash or boom? The answer is neither, at least not on a global scale. Instead, expect regional differences shaped by affordability, interest rates, supply shortages, and demographics. For buyers, the key is focusing on affordability and long-term security. For investors, it's all about rental yield and diversification. And for renters, it's about staying financially strong while building wealth in other ways. The bottom line, real estate is not just about timing the market. It's about time in the market. If you found this breakdown helpful, don't forget to hit the like button. It really helps us grow. Subscribe to Asset Bloom for weekly insights on housing, investing, and financial strategies. And drop a comment. Do you think your local market is headed for a crash or a boom? Let's compare perspectives from across the US, UK, and Canada. Remember, your financial journey is unique, but knowledge is the best tool you can carry.